Hey, good afternoon. Mep here. It's been a while. My last video was 4 days ago, and I was extremely busy this week. Some people may say the market was a little boring this week. That's what I heard from some commentators watching the TD network and watching some of the financial channels. But I saw a lot of action this week, and we had a lot of earnings this week as well. Um, so yeah, it's been 4 days since the last video, and getting close to 300 subscribers. Trying to grow the channel and educate folks out there that want to learn how to trade. This is what I'm doing for a livelihood. So let's get to it. This week was really a busy week for me. Let me open up my weekly trades. This week I did 463 trades. Those are my fills. So basically almost 100 a day. Um, I'm trading, like I mentioned in my prior videos, I'm trading really small, but being really active. That's about 93 trades a day, more or less. Um, but we are in earning season, and with earning season comes a lot of trades, speculation, maybe stuff that you want to enter into. Let's pull up here. I find this very helpful here in Stock Tweets, the earnings calendar. If you scroll back this week, on Monday we had 138 reports, Tuesday 314, Wednesday 410, Thursday 541, and Friday it leveled off at 150. Next week we're looking at 198 on Monday, Tuesday 134, Wednesday 114, Thursday 196, and Friday 21. So it's a lighter week in general. I think the following week, I think Wednesday, no, pretty, and then it dies down, looks like. Um, well, no, actually, this is crazy, but let's take a look at it. 36, 25, 58, 52, 795 on a Friday. I don't know if that's accurate. That might not be accurate, but we'd have to look at it. That's a lot of reports if that's true. I don't think that's accurate. Actually, let me take a look here at the calendar here in Market Watch, uh, and let's take a look at that date again. That was May 21st. It might be right. There's a lot. There's a lot here. Let's see. Put it up here. Computer's a little slow. Um, if I clicked on it, let me see. Go back. Doesn't tell you how many days. I wish it would tell you how many were here. We'll play it by ear. Still got time to check the information on that, but that's what it says there. And then uh, at the end of the month, slows down. Yeah, it dies down. So let's take a look at next week. So about 500 plus reports next week. So there's some more opportunities. And what I'll do is I'll do shorter videos and more educational stuff. Um, And what I'll do is I'll follow up on some of my trades that I did, look at my video archive like I promised, and do some follow-ups on those trades, and then look at some of the trades that I did here for educational purposes, the good and the bad, and then I'll do some videos. Today's Saturday and Sunday. I'll break down some. During the week, it gets tougher for me with trading. Then maybe I'll do videos on what I did for Monday morning, and then try and stay on tap with what's going on and looking at what I'm gonna do at the future trades, so you guys can look at and uh, and go with the flow, follow me and stuff, etc. So let's talk about one trade that I did. Um, that was pretty active on the gainer board on Friday. So Bill.com, remember, I'm engaged with the markets. This is what I'm doing for a livelihood. So I watch the tape and I kind of know what's a pretty good company, etc. I looked at bill.com during the week for earnings. And if you look at bill.com, I like to use stock charts, but you know, the TD platform's got a nice uh, chart right here as well. This one is a 20-day chart. So let's take a look at Bill. So bill.com, when I had looked at it, uh, you could see it was like $190, and it just had sold off all the way to 130 before earnings. And from what I remember, I mean, if you look at here at the chart, that's pretty much where it was at. Maybe a little bit lower, 110 here. Um, but if you probably do averages here, it probably looks pretty safe to say that this is like support here with this little cluster here of candles. Um, so when I looked at the option chain for Bill, I didn't see I didn't see much when I was doing the entry. Now, obviously, this is a change because the event has happened. Can't remember what the IV was and I entered. Excuse me on that. But the trade that I decided to do, and it was a directional trade. Let's put it up the order here for Bill. I'm still in the position. So what I decided to do was I did a calendar spread on Bill. This cost me, I did one contract. I keep them small and simple. It did cost me $140 to do this trade, plus the fees, 50 cents each option. So 141 was the cost of this trade. Um, and the reason I picked 160 is the 50-day moving average was about 152, and it was way under it. The 200-day was about 126. That's why I was saying 130 was probably, the low. Um, and if you look prior here, it seemed like resistance was at about 160. It got a couple times over 160. Regardless, I decided at the time, at the entry time, Bill was, we could pull up the 5-day chart. Let's pull up the 5-day chart. So at entry, I did this order on 5/6. They had earnings on 5, I think 5/6 they had earnings, but after the bell. Was it after the bell? Let's take a look. Uh, yeah, they had earnings after the bell on Wednesday, and then the price reflected on Thursday, the next day. No, I'm sorry. They had earnings. Well, they had earnings on. I'm sorry. They had earnings on Thursday after the bell, because I did it before the bell closed on the 6th, the same day of the earnings. Okay. So the price reflected on Friday, May 7th, the big gap up. So if you look here, I basically did this trade on May 6th at 13:26, which was probably one o'clock more or less. So 13, right around here, when Bill was at about 130, what I had talked about. So what I did was I looked at the option chain. I said, okay, let's uh let's do a calendar, and I had picked the 160 because of the expected move at the time. And we can open it up on the Analyze tab. You go to Analyze tab, and here's the trade. That's how it looks. So at entry, I was here, and I spent $141 on this trade. That's what I was willing to risk, thinking that Bill was way oversold to the downside. You see all these red candles. I thought it was kind of extreme. The RSI was at 30, relative strength index, usually bounces when it hits 30, and it usually reverts to the mean. So what I did was this was a directional trade, totally speculation, and I was willing to wager 140 on it. But I thought it was a good moment to do the trade because it was sold off. The RSI was at 30. They've had strong growth and strong prior reports. So that's what I did. So right now, currently, it's looking pretty good. And this is a calendar spread. You can see here how the 10th is. And currently up on the trade, $325, which is a 232% return on my 140. The maximum profit would be if it approaches 160 by expiration, which is 522, and that would be a profit of 778. We'll see how it reacts on Monday. I'm getting close to maybe taking gains here because it's had a pretty good move up. So that was a trade in bill.com. This is a call calendar spread. How do you set this up? So let's take a look at, for example, an earnings trade for Monday, so you can see how I come up with this thought process. So for example, I did some trades in VFF, Village Farms International. They do weed and they do vegetables and stuff like that, and they've been pretty good. They've trended, they've done pretty good, they've been upgraded, they're doing okay. So what I did in VFF, I did a couple calendars. So what did I do? Let's take a look how much these calendars cost me. Small trades. You want to stay small so you can live to play another day. Call me crazy, but that's what I do. So this calendar spread, I did the 13 and 14. This one cost me $38 plus a dollar fee in transactions for each contract. Dollar here, 50 cents here, 50 cents here. It's a dollar, so it's $39 trade here, and another one at the 14 for $31. So basically about 39 and 31, 80 bucks more or less, a little bit less. 30 and 68, 70 bucks was my trade there. So we can open this up on the Analyze tab on VFF, and let's take a look at one at a time. So the 13, and this is for Monday morning. So right now the stock is trading at 11.20, and the expected this is the market maker move. It's about almost $1. Now the monthly options chain is indicating $1.64 move, and implied volatility is 94%. So it's pretty high. But if you look at the IV rank, it's only 9. So historically, for the past year, the options are pretty cheap. But the main thing you want to do with these calendars is you want to look at this IV implied volatility here, which is 94, means it's pretty expensive, right? And compare it to the back month, which is 83. So there's a 11% difference in the implied volatility between these two options. So obviously you're going to sell the front month for more and buy the back month and get into these trades for cheaper. You always want to. I don't like to buy options just outright. I like to lower my cost basis and not fight decay, because remember, options are decaying assets, so you want to be careful with that. Let's see where I'm at. Okay, don't want to go too off, but it's important that you guys learn these calendar spreads because they're very good trading mechanisms. So okay, so right now this is where we're at. So if my assumption is looking at VFF, I think we can get a little bump here on VFF on positive marijuana news and stuff like that. And we got a nice little bar here, right? So I'm looking for 13, or just like move to the upside where the options, see, calendar spreads are low implied volatility play, IV rank. So the IV rank, like I said, was 9. This is low. Let's take a look here on Tasty Works. They have 31. So they have 31 here, and they have 9 here. Let's see what bar chart has it at. Just curious, because IV rank is very, very important when determining your strategy. It's very, very important. Let me see if I can put this here. And I don't really have any. There wasn't a lot of volume on VFF. So sorry, I can't compare too much. But one is 9 and the other one's 30. So anyways, I think a 38 dollars, $39 trade and a $31 trade, that's feasible. Anyways, going back to analyze tab. So, and we looked at the chart. So my assumption is that they probably report decent and get back to the 50-day moving average at least. And with the increase, obviously it was at 20 and it's been sold off straight down. So RSI is at 45. And looks like it's kind of creeping back up the RSI, and also a MACD looks like it's crossing a little bit here. So if we get a huge swing to the upside, the call options will increase in value, right? And so will the volatility, meaning that the option premiums will expand, and that's what we're looking for here. So you don't have to be completely right. So anyways, if we get that move towards 13, the max profit on this strategy is about $85. So it's an $85 profit at 13 on a $39 uh, assumption trade. And for the 14, we're looking at 100 and about 105 on a $31 trade. So that's why